You are listening to chartingwealth.com for Thursday, the 20th of September, 2018. We see stocks are mixed for the day. The S&P 500 is up. The Nasdaq 100, or the Qs as we affectionately call it, is down. TLT 20-year bonds down. Gold up. Let's jump into this market. We see that the market is struggling on the S&P, trying to continue to build and hit the high that it hit on the week ending back on the 31st of August. Hasn't happened yet. Derivative oscillator continuing to lose momentum. The price percent oscillator, similar to the MACD, is heading up. Now, those of you who don't know what we do and how we do it here, there are links, you'll see them at the end of the video, that will take you to videos we've done teaching you how to follow the charts as we do it, how we actually follow them, get into and out of trades. I would encourage you to take that simple class. It'll help you out marketably. Also, if you are involved with us and you haven't already taken the training that we have on the Heikin Ashi candlesticks, definitely need to do that. We'll always put at the end of these videos some great trainings that we have available for you. All of it, of course, for free. So that's where we see the weekly candle. So far, it's a green up candle trying to build. The S&P 500 up 0.12% for the day. We go from the weekly to the 2-day, still in a confirmed down move there, so we don't have a trade on the S&P 500. Remember, the long-term chart, that's the weekly, and the medium-term chart, that's the 2-day, have to be going in the same direction before we can even consider a trade because we are trend followers. We see the 2-day chart actually is heading down as far as our indicators go. The derivative oscillator down, gaining downward momentum. Price percent oscillator is about flat, but again, it's still down. The blue line is below the red. We do see that this latest 2-day candle is a green up candle, little bit of a wick on the bottom, still price movement well above the weekly trend line. So we go from the 2-day to the 4-hour. What do we see there? The 4 hours actually going up, but again, it's pretty much hitting about the same highs that it hit at the end of the day on Tuesday. So we're seeing a sideways slide there. That, of course, is depicted in sort of a sideways slide in the derivative oscillator, and the price percent oscillator's pretty much flat. So we don't have a trade on the S&P. We're trying to figure out which way that's going to go. And remember, all things being equal, the markets tend to move in the direction of the largest chart, and that is heading up. So we go from the Qs, from the S&P 500 to the Qs, the Nasdaq 100, the tech stocks. Looks like we might end the week with a crossover going down. Now, we thought of that at the end of the prior week, and the market just sort of flattened out. Well, we're getting another flattening, it looks like. That is a spinning top, a red spinning top, almost a doji. Again, take that Heikin Ashi candlestick training we have. About 80 or 90,000 people have. You'll get a great deal out of it. Got a lot of great reviews on it. We can see that the candlestick is pushing through actually the weekly trend line. Derivative oscillator's already gone negative. We may have a weekly vertical crossover at the end of the week. That weekly vertical crossover, super powerful. In fact, I'll try to attach to the end of this video some training for our weekly vertical crossover. I think it's called The Magic of the Weekly Vertical Crossover, so you understand more about the importance of that, because it might give you a trade at the beginning of this next week for you to practice. Remember, we're not a stock calling service, we're an education firm. So we go from the weekly to the 2-day on the Qs. What do we see there? Well, this latest candle is a big spinning top. The reason we call it a spinning top is because there's a wick on the top and the bottom. Derivative oscillators continuing to gain downward momentum, and we see that the price percent oscillator is also heading down, so pushing through the weekly trend line, which again hopefully is going to give us a weekly vertical crossover going down. Now, those of you who don't quite know, why would anybody want the market to go down? Because you can trade in the opposite direction of the market by buying an inverse fund. That's another great training we have on inverse funds, how to make money when markets crash. All this is for free. We'll attach that one at the end of this video also, so you can listen to that one and get that training. So we see it pushing through on the 4-hour chart, down in the morning and down in the afternoon. It's also over in the negative. So we'll continue to watch. Perhaps we'll have a weekly vertical crossover at the end of the week, which will give us the ability to hop into this down move if that continues to bear out. so we can trend follow it. What about TLT? Well, we had a weekly vertical crossover at the end of the prior week, and of course that's continuing to work out beautifully. Down again today, 0.60%. We have a big red down candle, the biggest we've seen yet, which again is part of the glory, the beauty of trend following. When you have a trend occurrence happen where you have a weekly vertical crossover, which we had, that portends typically continued down movement if that's the direction, which it was here. And we continue to see that happening, actually pushing through the Bollinger Bands, which are volatility bands, derivative oscillator gaining downward momentum, price percent oscillator heading down. 2-day chart, same thing, actually accelerating in down movement. That is beautiful, pushing through the Bollinger Bands there also. And we go to the 4-hour chart. What do we see there? Of course, we had a jumping in point for those of you who are looking to hop in back on Tuesday in the afternoon after things push through. Typically look to jump in on a Monday morning after we have a weekly vertical crossover, but that wasn't really working. The market actually was trying to head up in the morning and the afternoon, but really started bending over the next day. And that's fine. If it doesn't give us an opportunity to jump in, we're going to wait and take the right opportunity, which you guys did on Tuesday. And again, we see continued down movement, price percent oscillator heading down, derivative oscillator gaining downward momentum. Beautiful, just what we wanted. Now, lastly, we go to gold, and we are waiting for gold to cross over going up so we can ride that pony for some growth in gold, if indeed gold is bottoming out. Hasn't happened yet, but has been sliding sideways, tending up. That's what it looks like so far this week. That derivative oscillator might be getting ready to switch over positive along with the price percent oscillator. May not happen by the end of this week, may happen next week, may not happen at all. We'll wait and see if it does. We will let you know what's going on the 2-day chart. Again, a green up candle, a spinning top, indecision, some tending up, price movement above that 2-day trend line. Remember, weekly still in a confirmed down move. 2-day crossed over going up back on Friday the 24th, that 2-day candle ending then. Derivative oscillator is about flat. So we look lastly at the 4-hour chart. What do we see there? It is bouncing off the red signal line, gone green in the afternoon on the derivative oscillator, price percent oscillator heading up. So we'll just continue to monitor gold, see what happens. My friends, thank you so much for joining us. You have questions, problems, concerns, let us hear from you. chartingwealth1@gmail.com. God bless. All the best from the whole team here at Charting Wealth World Headquarters.